Good evening. Ira Epstein of Linn and Associates with your metal market wrap-up. And this is for Wednesday, the 22nd of September, 2021, just getting on to 5:10 in the afternoon. So I waited for the market to reopen, gold down. Remember, the settlement price of gold comes in at 12:30 p.m. Central Time. We had the Fed announcement at 1. Then at 1:30, we had what? We get the Fed chair talk. Now, 1:30, you got to figure out the time for Asia and Europe. And in Europe, the markets, people have gone home from their trade desks already. Asia, they're sleeping. So we get this yin-yang as the market goes around. So, you may wake up in the morning to different prices in the stock indices, but the gold market is saying, at least those in the U.S., no. What the Fed chair said is tapering's going to begin in November. It'll take a terrible jobs number come the beginning of October that we see, and we get that, right after the first week of October. So when that comes out, if it's okay, it doesn't have to be stellar. He's, from what I heard him say, and I was listening word by word, we're going ahead with the tapering. They want to see that end by the middle of the year. There are some Fed members that think that we should see interest rates rise the beginning of 2022. The majority, as I see it, still think 2023. But there's a lot of time between now and then. This is 2021. We still have another 3 months this year. Let's see where we go. The Fed also said very clearly that they could start the tapering. They could throttle it up. They could pull it back. They'll see how the markets adjust to it. In other words, they're going to be data receptive. They are still very concerned that there's 1.3 million jobs. There's 1.3 jobs for every unemployed person. So not only do they have the jobs, if you want to get employed, you'd have more. I had someone over last night that doesn't like where she's working, a friend of the family. And I was explaining to her, you don't wait for, in her retail position, to make the move. You move now. You're going to command everything you want right now in front of Christmas sales, whatever, if you want to stay in the retail business. And if not, the door's wide open because people are willing to train for everything. Pretty simple. So that job movement going to continue. So in the gold, why do you want to own gold if interest rates are going up and the dollar's going up? I'll give up on that. I don't know why people do. When I look at the gold market, I think it was disappointing. Here is where the market failed. Here's where it failed again, especially this most recent failure up here that just happened. And when that happened, I said, what a disappointment. I know I made it very clear here, and you could see it is still full of disappointment. The market's working itself now back down in clear bearish stage form that you don't see on the swing line. You see it on this chart. Boom, boom, boom. The swing line's not trending. The swing line has a lower low, a higher high, not a trend. The market, when you look at moving averages, failed again against the 18-day average. And when we were here, I showed you how this was another failure zone that happened up at that level. I was friendly this market back there. I thought it had the power to make a move. That was real wrong, but that was the beginning of the month. I said it. Very clear here for all of you. Nobody walks on water. A lot of trades I make or recommend, and I don't do them here, but I do to my subscribers in their videos, that, when they don't work, I don't hide. I come right out. That trade didn't work, but I also don't gamble the house. I know what I'm risking, why I'm risking, the bigger risk trades, the smaller risk ones when I put out a recommendation. Lower low, higher high, still bearish, could get all the way back into that 1750 level. Resistance still the 18-day average, and you have a market that, if you look at these readings, is still in oversold territory. No, it's just out of it with one reading and in it with another. When either of the readings are under 30, you're oversold. So oversold territory, a failure event, nothing going on. That's how I'm reading it. In the gold-silver ratio, silver's starting to gain back a little bit on the gold. And if we come to the silver market, you see where the failure number's been, the 18-day average. You've been coming down in the market. Silver had a little bit of a respite today, as did copper. And that is because for the moment, I want to use that ultra clear, for the moment, Evergrande the property developer in China has gotten a bit of a respite. Tomorrow's another day where they're supposed to pay some bonds off. According to the chairman, they're working with the debtors to see what they can do. In other words, like in the U.S., if you can't pay your bill, you work it out where you get more time on it. The principal doesn't get forgiven. They're doing all that. But it also took the Chinese 90 billion yuan today to put into their markets to make them stable. We're talking a massive amount of billions of dollars in U.S. money if you were to convert it. In the copper, you can see how you came running back up when that happened. Now, this is where you closed yesterday, right at those Bollinger Bands. So to get a bounce, come on. That's what I'd expect, and it's what I teach. Also teach that the failure zone should be the 18-day average of closes. The trend is down. The bias is down. You're opening a bit lower in the market. Wouldn't be surprised if you just stay caught between the upper and lower Bollinger Band. A very difficult situation because you're trading the Chinese environment more than you're trading the copper market. They're 50% of the world usage. And if you think this doesn't impact, come on. And I'm waiting for China, by the way, to drop the other foot on Australia in some manner. Australia still sends a lot of iron ore and other products to China. It could be trade that they come after them on for making this deal with the U.S. and the U.K. on submarines. Commodities are in play there, as well as travel, because Australia by Christmas wants to open up its borders for travel again. But you've got a lower low, higher high in the platinum. This is the market. Boy, was I not right on this one. I like saying when I'm not right. The market got through here, lost its embedded reading. This is where you had to call it a day. And today the market just opened steady, not like it jumped away, and then rallied another $50. So you're up 50 there, you were up 50. You added $100 in this market. I think the statement is we're not going to see the $9 level again. Not for a long time. If you were to ask me, that's my bet on it. In the palladium, hasn't come alive yet. It lost its embedded reading where you should no longer be short. Here's where the market lost it. You didn't get it back today. I think the pros will buy it. You heard me, buy it right here because it's not getting it back. Stop under that low, then look for the 18-day average. It's a contra-trend trade, certainly not for all types of traders. In the dollar index, okay, mark on your chart and write down on it today's low. If it's taken out over the next 2 days, be that Thursday or Friday, then I think the market's got a problem. Why isn't it holding the rally? It's got the Fed behind them. Fed talk is that they're going to be raising interest rates. You've got all that coming about. But you're also with an upper Bollinger Band, which is a big resistance point. Trend up, bias up. You set up a bull trap. If today's low, it was 92.97, is taken out either on Thursday or Friday, and that would target back to the 18-day average. Barring that, you're still at a resistance point. So I look at it all, and I'm trying to figure out, what do you do? Well, I know what you do. Our futures trading kit. Here's a new look at how that kit all works for you. It's one spot. So we're going to send you a link. And in the link, you're going to open up the whole kit. You can pop it up right on your trade desk. You'll get PDFs. You're going to get areas to go to the Merck for tools, to us for tools. You're going to get the chart patterns. There's 14 popular chart patterns that I teach, and you can look at them to see how they look on a chart and what they typically resolve them with. A popular tool for entry, exit, day trading are pivot points. It's something you should look at. Now, we're getting back to a more normal business cycle from everything I'm hearing from the Fed. You have to start looking at M1, M2, M3, and at the Merck. These are all the different courses that we link you into in this. What I didn't say, our charting software, that's also in here. So you get all this. It's free. Just go to our website under free offers, give it a click. I'm Ira Epstein. Talk to you later.